Alright, but today is the 9th of July, being a Thursday, and in relation to the economic calendar, today we had no high impact news. So simply this video, we're just going to be taking a look at the trade that I took during the New York AM session on the NASDAQ. As per usual, we're going to be taking a look at the components and then we jump straight into the analysis. So trade was taken during the New York AM session, and we were looking to frame a 10 a.m. power of 3. We had the weekly opening being engaged with, as well as an M15 SIBI. We had a M15 standard deviation projecting for buy side in order for us to locate that point of inception for sell side delivery. Also had a 930 leg standard deviation projecting for buy side, doing the exact same thing, so allowing for us to locate that point of inception for that sell side delivery. And then the entry mechanics would have been a 15-second change in stay in delivery, as well as a 15-second inversion fair value gap. And then we also had a 15-second and M1 standard deviation projecting for sell side. Exits for the trade would have been an M15 BSI high, as well as the first presented fair value gap of the New York AM session. And then lastly, the opening range low for the New York AM session would have been that drawn liquidity. So briefly, just taking a look at the trade before we jump into the analysis. So short here off 15-second change in stay in delivery, and then added into the position off of the 15-second inversion fair value gap, and then also added into the position again off of the 15-second inversion fair value gap. And then the first exit for the trade would have been at this M15 BSI high. Full scale out for the position would have been inside of this fair value gap, which would have been the first presented fair value gap of the AM session for Thursday. So jumping in and taking a look at the analysis. So we're looking at the M15 right now. Standard deviation would have been anchored from this candle's low all the way up to this candle's high, and we see that -2, -2.5 projecting for the weekly opening, as well as an M15 SIBI as well. So can take a notice of the fact that this the -2.5 level in specific, that -2.5 level, aligning with that weekly opening just very smoothly. This is very nice to see. I like to see when stuff like this occur because it's not random. And if we're operating or engaging with these markets with the preconceived notion that they operate off of an algorithm, we're not surprised to see something like this. If anything, once we engage with this level, we're expecting to see algorithmic signatures present themselves in price. Now, before I move on away from these two, the last thing I will say is also that this M15 SIBI displaced below this respective weekly opening. So if you were to go back in price and look at this M15 SIBI as well as that weekly opening, project them both out in time, you take a notice of the fact that this M15 SIBI displaced through this weekly opening. But what we were looking to frame would have been a 10 a.m. power of 3, being an open low high close or open high low close. Now in this case, we were looking to frame an open low high close. So positioned ourselves at the opening of that 10 a.m. candle, or in fact before the opening of that 10 a.m. candle, but we're positioning ourselves around that opening of the 10 a.m. candle, and then we're looking for it to form its low to frame that open low high and then close. So then jumping into that M1, we have this 930 standard deviation, and we can take an acknowledgement to the fact that, okay, this -2, -2.5 projecting for that week opening M15 SIBI, but it's also in alignment with this M15 standard deviation that we had here as well. So 930 standard deviation, again, simply just going to add extra conviction as to when price action engages with this segment of price action here, that bearish signatures should begin presenting themselves in price and the framework should invite for sell side delivery. This is a time-based standard deviation as well, specifically being 930. But apart from that, we have this 930 standard deviation anchored from this candle's low all the way to this candle's high. We have that -2, -2.5. And from 930, we have that deliverance up towards buy side, engaging with this M15 SIBI, that weekly opening. And cracking correlations end up establishing themselves as we are beginning to approach that M15 SIBI. And then the framework for point of inception ends up occurring right here, and 10 a.m. opens. With the 10 a.m. opening, we end up seeing a cracking correlation presenting itself above that 10 a.m. opening, inviting for that sell side deliverance. And this segment of price action here would be the distortion of price. Now, it's not the distortion of time. Reason why being is because time is in motion here in terms of that 9:45 until that 10:15 mark. That is occurring. So it's not the distortion of time. So we have the distortion of price for a very small, brief moment. But we know that whenever the distortion of price occurs, once that phase is finished, it's just going to invite for a spool. And that is exactly what we see. I've explained it multiple times in terms of you need to view that distortion of price as if it's just the charge up bar for something. So we end up seeing price action spooling very aggressively to engage with this pool of sell side right here, which would be that this respective M15 BSI high. If we were to naked eye project this low out in time, we'd be able to see how price action is utilizing it as resistance. So we're not having any closure above it, and the body's being very respective, and in price action continuing that sell side delivery motion to then engage with that New York AM first presented fair value gap that resides right here. Very, very aggressive in terms of the deliverance down to engage with it. And then jumping in, taking a look at the 15-second, this would have been where all of the executions were. So we have that deliverance up, engaging with that M15 SIBI, cracking correlations establishing themselves here in price. And as we can see, that 30-minute window was active, being that 9:45 until 10:15. And we end up having a 15-second change in sustained delivery presenting itself in price here. So 15-second change in sustained delivery. We have a series of up close candles, series of down close candles, simply just market executed the moment we had the closure above the series of up close candles. And then the next point I look to add into my trade would have been off of this 15-second BSI right here. So with this candle, we slam right down it, and then we return back into it. That is where I would have added into the trade again. Now, staying on this 15-second inversion, if we're paying attention to it, it played a very key part in price action. So it presents itself in price. It's utilized as support. It's utilized as support multiple times to then engage with this M15 SIBI, as well as that weekly opening here, while cracking correlations are being established in price. And then a change in sustained delivery occurs, and then we slam back down below it. This BSI should be utilized as resistance. And what we end up seeing is price going into that phase of distortion, price distortion. And the accumulation of short orders is simply just occurring here. So one would say that the algorithm is just spamming short orders while we are sitting around here. Cracking correlation presented itself here above that 10 a.m. opening, and then we close back below, and we end up seeing, the moment we close back below it, we end up seeing how the body is being very respective. Wicks are just painting outside the lines, and that invites for that sell side delivery motion. So yeah, that would have been it for the trade, to be quite honest. There really wasn't much to it. If we're just taking a look at the actual executions, didn't actually have a 15-second share up, but yeah, this would have been it for the trade.